So those are a whole host of broader market stocks in focus. Let's in fact now go to one particular company which has been in focus since it came out with its numbers on Friday. It was a disappointing showing, at least in terms of the guidance cut. Laurus Labs is the one that I'm talking about. It was the guidance cut which really got investors a bit worried. The stock was down 7 to 8 odd percent. On Friday's trading session, it's down 4.5% today. It's moving closer to its 52-week low. To talk more about this, we have Mr. Chava, who's the founder and CEO of Laurus Labs, joining in now. Mr. Chava, hi, welcome to the show. I wanted to start by discussing the antiretroviral segment. The formulation segment disappointed, and that was largely led by the ARV segment. What went wrong this quarter, and what can you guide your investors in terms of a recovery?
Good afternoon. In the antiretroviral segment, we have seen good recovery in APIs, whereas in the formulation segment of ARVs, there was a sharp decline in the prices, and we didn't have a lot of offtake coming from long-term agreements during the Q2, and we didn't recalibrate our pricing for the in-country tenders. That's the reason we had a significantly lower sales of ARV formulations in Q2. But that doesn't mean we are having the same trend in the second half of this year. We have very good visibility for Q3 and Q4 for ARV formulations. So here, one has to keep in mind the company's strategy is to garner as much market share as possible, but you can't judge the performance based on one quarter ARV sales, formulation sales. And we are very confident things will get better in Q3 and Q4. As we indicated the investors, the ARV APIs got back to quite normal, and we do expect that trend will continue for the rest of the year as well.
Okay, so you are saying that you're probably going to see a recovery when it comes to the tender business, the ARV segment, in the coming quarters. I would like you to quantify that, but I'll just get back to that in just a bit. The other disappointment was obviously the guidance cut. Everybody was expecting you to achieve that $1 billion revenue guidance. Going into FY, say, in terms of an exit revenue run rate for FY23, it would stand at around 6,500 odd crores. Is there any upside or downside target to that? And what are you guiding for now in FY24? Are you confident in terms of providing some revenue visibility for that?
So here, when with enthusiasm, we gave guidance to the market, but some people like it, some people don't like it. That is the reason we were very transparent in letting our investors and market aware in Q2 itself that we are falling short of a revenue by target by 10%, so that people can take calls based on what we communicated. Instead of keeping it too close to ourselves, we made it very transparent to all the investors. That doesn't mean we are not putting efforts to increase our revenue base. But one good thing in Q2 is there is a lot of diversification of revenues. Our CDMO did very well, ARV APIs did very well, and non-ARV APIs, non-ARV formulations also did very well. So as a CEO, I'm very happy for the results what we declared in Q2. So ARV is a one quarter phenomenon. It's not a regular phenomenon.
Yes, that's correct. The other businesses like CDMO and synthesis has done well for you. Just one more last question on the ARV business. As Ekta was asking you, what kind of recovery are you expecting in the second half from this business? In the first half, it's down 27% on a YOY basis. How much do you expect it to recover in second half? And in terms of the contribution that is from short-term and long-term tenders, short-term is usually just 1/4 of your business in the ARV segment. You said pricing was not favorable this time around. What is the split right now? Do you expect that to come down as well?
We don't expect pricing to come down further. I think this has reached a bottom now. Only volumes will pick up, which we already have seen in the month of October itself. So we expect very good recovery from H1 overall to H2, we will do very well in ARV formulations.
Okay. So the synthesis business, investors and analysts are worried that a large component of the synthesis business was also aided by a COVID-19 related project which you are executing. Give us some clarity in terms of how much of your revenues probably consisted of that COVID-19 related project, and what is growth looking like going forward in the synthesis segment?
We can't give you specific details of customer, product and volumes, but we can give you clarity on our growth in synthesis CDMO business is coming from multiple partners and multiple projects in the pipeline. We do expect that division will be a star in the coming quarters and coming years as well.
Saying it'll be strong, sir. Just some numbers, so to say. You have 3 manufacturing units coming up in FY24-25. There is a capex on an R&D unit as well, and the expectation is they will start to support the project execution in your synthesis unit. Tell us what kind of addition will you see from here on? How much of a growth driver will the synthesis business be for you? How much of a revenue contribution will come in from here?
We are building 2 manufacturing sites for our CDMO business, one exclusively meant for animal health. That facility will be qualified by mid of next year. So commercial revenues will start coming from next financial year. We're also building a plant for a specific product for a customer, which we will give you details at an appropriate time since we haven't signed any agreement yet. So 2 new facilities will cater to specific customers and specific projects which we have very good visibility. And we're also building a dedicated R&D to support the CDMO activities. Right now, there are a lot of projects we are bidding. We have in the pipeline, some in the advanced stage. So to cater to those demands, we're increasing our R&D strength as well, much beyond what we have right now. Okay. So R&D will be ready by mid of next year, and then one facility will be ready by September, October next year. The other facility for CDMO will be ready by December 2023.
Okay. Mr. Chava, just a quick last question then. One of the things that did stand out were your margins, and that was probably aided by how you did in your synthesis business. But despite what happened in your ARV segment, you did manage to maintain those 28% margins. So give us some guidance in terms of what the margin picture would look like, probably in terms of a band, or whether you can sustain this 28-29% going forward.
I think we will sustain EBITDA margins closer to 30% for the entire year. And our business is strong, fundamentally good, and we are not losing any market share. We're only gaining market share in other products. So we expect to maintain the margins closer to 30%.
Last question from my side, Mr. Chava. You are very optimistic on the business, but the promoter holding is really low at 27.27%. What do you intend to do with that? Will you be buying more stake into the company? Any other plans, any strategic selling plans that you have here?
That's maybe we don't have any immediate plans to increase our stake or buyback right now. Our focus is on strengthening our diversification plans further beyond ARVs, and also building facilities to cater to CDMO. I think our focus is on that rather than worry about how much stake we have in the company right now.
Okay. Are you confident of that $1 billion in FY24 at least?
We'll come back on that. So yeah, we don't want to comment on FY24 right now.
Okay. All right, Mr. Chava, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Laurus Labs, tight-lipped in terms of guidance for FY24, but no, they're not going to achieve $1 billion in terms of revenue in FY23. That's primarily because of the volatility that they've seen in the antiretroviral segment, though they are expecting a recovery in that particular segment probably in the second half of this fiscal. The stock down another 4.5% at this point. Take a short break. Up next, we'll be talking to Sharda Crop.